Most people think $1,000 is the starting line of a massive fortune. They think they can buy a random stock or a weird coin and wake up with a Lambo next Tuesday.
That is the fastest way to stay broke. $1,000 is not enough to change your life, but it is exactly enough to lose. If you treat this money like a lottery ticket, you have already lost. In 2026, the world is moving faster than ever. AI is changing jobs, the cost of living is still a nightmare, and everyone on your phone is screaming about the next big thing. But the math of money has not changed. If you want to actually build something that lasts, you have to stop looking for a shortcut and start pouring the concrete for a foundation. We are living in a weird time. Interest rates are not what they used to be, and the old advice of just putting money in a bank and forgetting it is basically a slow way to watch your money disappear. Inflation is a quiet thief. If your money is sitting in a standard checking account, it is losing value every single hour. You are essentially paying the bank to hold your money while they use it to make themselves richer. To win this year, you need to understand that $1,000 is a seed. You do not eat the seed, you plant it. But where you plant it depends entirely on how much of a mess your life is right now. We are going to look at a specific map. This is not a list of top 10 stocks to buy. This is a strategy to ensure that by the time you have $10,000 or $100,000, you actually know what you are doing. Before you buy a single share of anything, you have to look at your debt. If you have credit card debt, you are not an investor. You are a person with a leaking boat trying to pour water out with a spoon. Credit cards usually charge you 20% or 30% interest. There is no investment in the world that consistently pays you 30% year after year. If you invest your $1,000 in the stock market but you still owe $1,000 on a card, you are losing money. You are paying the bank 30% to earn maybe 8% or 10% in the market. That is bad math.
The very first thing you do with that $1,000 is kill your high interest debt. It is the only guaranteed return on investment you will ever get.
The moment you pay off that debt, you have effectively earned whatever the interest rate was. It is an instant win. If your debt is clear, then we move to the next step. You need an emergency fund. Think of this as your financial airbag. You don't drive down the highway expecting to crash, but you would be insane to drive a car that didn't have an airbag. 2026 is unpredictable. If your car breaks down or you lose your job, and all your money is tied up in the stock market during a crash, you are finished. You will be forced to sell your investments at the worst possible time just to pay rent. Take $500 of that $1,000 and put it into a high-yield savings account. In 2026, these are easy to find. You want an account that pays at least 4% or 5%. This money is not there to make you rich. It is there to keep you from becoming poor. It is your sleep at night fund. It stays in a separate bank so you aren't tempted to spend it on a weekend trip or a new pair of shoes. Now you have $500 left. This is where you actually enter the market. For a beginner, picking individual stocks is a trap. You might think you know which tech company is going to win the AI wars, but you are competing against billion-dollar hedge funds and supercomputers. You will not outsmart them. Instead, you buy the whole market. You put that $500 into a low-cost S&P 500 index fund or a total market ETF. This means you own a tiny piece of the 500 biggest companies in America. If Apple wins, you win. If Amazon wins, you win. Even if a few companies fail, the others carry the weight. Historically, the market goes up about 10% a year on average. This is the boring path, but it is the only one that works for 99% of people. You are not trying to find a needle in a haystack. You are buying the whole haystack. In 2026, you can do this through almost any app with zero fees. You set it, and you do not touch it. You do not check the price every day. You do not sell when the news says the world is ending. You just let it sit. There is one investment that beats the stock market every single time, especially when you only have $1,000. That investment is you. If you spend that $1,000 on a course, a certification, or a tool that helps you earn more money at your job, your return is infinite. Think about it this way. If you invest $1,000 in the stock market, you might make $100 in a year. That is cool, but it won't change your life. But if you spend $1,000 on a specialized training program that helps you get a $5,000 raise at work, you have made a 500% return on your money in 1 year. and you get that raise every year after that. In 2026, skills like prompt engineering, data analysis, or even high-end trade skills are in massive demand. Use a portion of your money to become more valuable to the world. The more value you provide, the more money people will give you. Investing in the market is how you grow wealth, but investing in yourself is how you create the capital to invest in the first place. You are going to see a lot of people talking about altcoins, meme stocks, or AI-driven trading bots that promise to turn your $1,000 into $100,000. They are lying to you. These are usually pump and dump schemes where the person telling you to buy is actually the one selling to you. When you have a small amount of money, you are vulnerable to greed. You feel like you need to take big risks because regular investing is too slow. This is how beginners get wiped out. They take their hard-earned $1,000 and throw it at a moonshot. The coin drops 90%, and they are left with $100 and a lot of regret. They then decide that investing is a scam, and they stop doing it entirely. That is the real tragedy. The scam isn't the market. The scam is the shortcut. One of the best things about investing in 2026 is that you don't need a lot of money to own expensive things. You can buy fractional shares of stocks. If a single share of a major tech company costs $3,000, you can still buy $10 worth of it. This allows you to stay diversified. You don't have to put all $500 of your investment money into one place. You can spread it across different sectors like healthcare, energy, and technology. This protects you. If one industry hits a rough patch, your whole portfolio doesn't go to zero. The biggest enemy of your $1,000 is your own brain. You will be tempted to spend it. You will see a sale on a new laptop or your friends will want to go on a trip. To protect your future self, you need to automate everything. The moment you get that $1,000, move it. Don't let it sit in your main account where you can see it every time you open your banking app. Set up an automatic transfer to your investment account. If you can, set up a recurring contribution of even $20 a week. The amount matters less than the habit. Most people wait until the end of the month to see what is left over to invest. Usually, nothing is left over. You have to pay yourself first. Treat your investment like a bill that you have to pay. In the past, you needed a broker or a lot of paperwork to start. Now, the barriers are gone. But because it is so easy, it is also easy to treat it like a game. Your investment app might look like a casino with flashing lights and bright colors. Do not fall for it. The world in 2026 is hyperconnected. News moves in seconds. You will hear about a market crash at 10 a.m. and a market recovery by 2 p.m. The secret to winning with $1,000 is to ignore the noise. The most successful investors are often the ones who forget their passwords and don't look at their accounts for 5 years. If you really want to gamble, if you really feel the urge to buy that weird crypto token your cousin mentioned, use the 5% rule. Take $50 out of your $1,000 and use it for your crazy ideas. If it goes to zero, you only lost $50 and your foundation is still solid. If it actually goes to the moon, then great, you have a nice bonus. But never, ever bet the whole $1,000 on a maybe.
A lot of beginners forget about taxes. If you buy a stock today for $100 and sell it tomorrow for $110, you made $10. But the government is going to want a piece of that $10.
In many places, if you hold an investment for less than a year, you pay a much higher tax rate. This is called short-term capital gains. If you want to keep more of your money, think long-term. In 2026, look for tax-advantaged accounts like an IRA or a 401k if you are in the US, or similar accounts in other countries. These accounts are designed by the government to help you save for the future. They either let you invest before you pay taxes or they let your money grow tax-free. This is like getting a head start in a race. Investing is exactly like growing Chinese bamboo. You plant the seed, water it, and fertilize it for a whole year, and nothing happens. You do the same for the second year, and still, nothing breaks the surface. This happens for 4 years. You might think you're wasting your time. But in the 5th year, that bamboo sprout breaks through the ground and grows 90 feet tall in just 6 weeks. Did it grow 90 feet in 6 weeks? No. It grew 90 feet in 5 years. Your first $1,000 is that seed. For a while, the growth will look invisible. You check your account, and it looks exactly the same. But under the surface, Your money is building a massive root system called compound interest.
If you dig up the seed because you don't see instant results, you kill the tree. But if you let it sit, eventually the exponential growth phase kicks in.
And your wealth shoots up vertically. The $1,000 is not the hero of the story. Time is the hero.
You aren't just investing money, you are buying the years of invisible growth that lead to the 90-foot tree. Beginners often say they are waiting for the market to crash so they can buy low. This is a mistake. The market spends more time going up than it does going down. While you are waiting for a 10% drop, the market might go up 20%. Even if it does drop, you will probably be too scared to buy because the news will be screaming about a recession. The best time to invest was yesterday. The second best time is today. Put the money in and let it work. Don't try to time the market. Time in the market beats timing the market every single time.
So here is your path. First, look at your debt. If you owe money on a credit card, pay it off. That is your 100% guaranteed win. Second,
Put half of what is left into a safe, high-yield account. This is your shield against the world. And third, take the remaining money and put it into a broad index fund. This is your engine for growth. Finally, take a small slice and spend it on a book, a class, or something that makes you better at your job.
This isn't a get-rich-quick scheme. It is a get-rich-eventually plan. It requires discipline and the ability to ignore the hype of the moment. 2026 is going to be a wild year for the economy, but if you follow these steps, you won't be a victim of the volatility. You will be the person who stayed calm and built a foundation while everyone else was chasing shadows. You have the $1,000. You have the map. Now you just have to stay out of your own way. Stop looking at the charts, stop listening to the gurus, and start being the person who takes their financial future seriously. The version of you 5 years from now will thank you for being boring today.